Well, good morning, traders. Wow, what a day. What a day, and it's just starting. Those of us that live here in the United States or in North America or wherever around this time zone, we woke up to the oh my God, what happened overnight? And I think the big move is that we've seen this big move in the dollar, and the dollar has actually rallied quite substantially. The combination of positioning in the dollar, where you had a lot of euro longs, and you guys remember when the euro went above 120. When Donald Trump said that he wasn't worried about the weakness of the dollar, that false breakout had led to a move, and which happened to be right here at the end of January, has led to a reversal. Now, the euro, or excuse me, the dollar index and the euro itself, we're coming into pretty key resistance for the dollar index, the Gartley pattern. Actually, I was short some dollars. I got stopped out overnight, me personally, but we're still in this descending channel. Which also, if you guys look at the euro is in a rising channel, and we pivoted off of pretty key support today. Now, whether the dollar continues to gain strength is a question that we're going to be asking, and I'm going to be asking the team about this here in a minute, because I think that's going to be rather important. I think the whether or not the dollar continues to gain strength probably has more to do with what the S&P does at this point. If you guys haven't seen, the SPOOs, after breaking lower through the triangle, has come to horizontal support. We all know that this is really critical support in the S&P, and if you just take a little bit of a let's take a little bit of a view out of what we're seeing here. Obviously, long term, you guys know that there's multiple, and we've talked about this in nauseum since COVID. We have multiple 5 waves up, channel resistance. Most of you already know that. That was a given. The question was, were we going to eventually roll over, or were we going to continue higher and press into new highs, into this resistance? Now, obviously, the selling pressure is giving away a little bit, but we haven't really broken down. If you look around and you're like, hey, the stock market's trying to roll over, it is, but we're one headline away from us reversing. And if you talk about, like, the current situation we're in, if there's let's just say in Iran there's a leadership change, and they come to the table and things get done here quickly, could the S&P recover? Absolutely it could. And that's why we have to be very much on our toes, understanding what's happening as it's happening. And that's kind of the importance of having a squawk service where you can actually see a timeline of things that are happening. I read something interesting yesterday, a couple of times actually, because of the news stream that we're seeing. If you're using X or Twitter, there's been a lot of complaints about how inefficient it is, because Elon Musk and the team they've totally messed up the algorithms, where the timelines are jumbled. You don't know what's happening when it's happening. So if you're using just Twitter or X, it's a little dangerous, because of what you get might not be happening in a timely manner. That's why it's important to have like a squawk service, so you can see in succession what timeline things are happening, and that's pretty important. And I found that really fascinating, how so many of the financial folks on Twitter were so frustrated, especially over the events that we've seen the last since the weekend in Iran. It's like you don't know what's happening, when it's happening, and whether that was breaking news or wasn't breaking news, whether it's AI, not AI. And that's why having a squawk service like this and being able to just kind of go through it is really, really important. But I'm gonna take a step back. I want to talk to our guys that have been awake and have watched the carnage in real time. Ryan, let's start off with what in the fudge sickles is happening out there.
No one wants anything.
Seriously, like, whoa, got up this morning and was like, whoa, what happened? So what's going
Yeah,
on?
no one wants anything at the moment. Although you guys in the States are changing things up a bit. Yeah, look, sitting down, looking around at what was going on. You try and follow the lines. We're seeing the dollar get bought up, and then you think, well, what's happening? When you look at stocks, they're getting sold. You look at bonds, they're getting sold. You look at gold, it's getting sold. The conclusion.
This is not your normal risk off, is it?
No, the conclusion you can draw from that is that money's coming off the table. People are moving to cash. They don't know where to put it. It's either too expensive to put it in risk assets, or they don't trust the safe haven. So it's stick it under the mattress, and come bring it back in when things settle down. So that's what I'm seeing. It's a definite change to what we had yesterday.
Yeah, some of these big. I mean, this you guys probably seen it, and the big reversals that we got and the candles. I mean, these are insane. I'm gonna go over just like the 10-year so you guys can really see like the development that we saw, like the engulfing candles and false breakouts. I mean, when fixed income gets sold, it's like, holy cow. And then obviously gold's under pressure too. Like the last thing you would expect on a day like today is for gold to be under pressure. Obviously we did have the Gartley pattern set up. You guys all knew that, but I was really surprised, genuinely surprised when I got up this morning. I'm like, what is gold doing down here? I mean, is there any explanation to that, Ryan, in your view?
As I say, people just liquidating. We get it sometimes at these moments. The market thinks that. I think this what caused it is the fact that this is going to drag on, because Trump said it's potentially going to drag on. He mentioned 4 or 5 weeks yesterday evening, and the market is used to these things happening and worrying about it for 5 minutes and then moving on. But if it's going to be going through this for the next 4 or 5 weeks, that's a potential big hit to economies, a big hit to inflation. It's all bad news, bad news, bad news. And I think when the market has a moment like that, it thinks, right, we just need to liquidate, sell up, take profits, whatever you want to call it, and just move to the sidelines and until things calm down, and then the money comes back in and goes to work. But when you sit down and you think, oh well, people must be buying treasuries for the safe haven flow, but not. They're selling them. That's a red flag. Oh, they're not running into gold, like you say. That's a red flag. They're selling stocks. That's a red flag, because everyone's long to the eyeballs in stocks. So why are they selling? Because they're worried. They're worried about what the future brings, and so the safest place is, as I say, put it into cash.
Right. Okay. And so that brings up another question. I'm glad you brought that up, and I'm gonna bring in K-Man for this. And good morning, K. How you doing?
Excuse me, I just had my squawk here making a lot of noise. What was the question?
I forget. I have the goldfish brain today, so I forget what I was even asking. No, just jokes aside. I was gonna ask you about like carry trades. We've been in this very, very strong uptrend for a long time. You've had this huge. Let me go back to equities. You've had this huge move up for a long time. Markets are wavering, and I would argue that we're threatening a potential breakdown, which, I mean, we've been sitting here looking at it. It seems pretty obvious that it would happen, but it really hasn't happened yet. But there are trades that have been put on for an extended period of time to take advantage of this, and like a lot of them would come in the form of, you know, buying Mexican pesos. We're finally seeing the Mexican peso weaken, and you know, we broke that 1530 and broke the 618, and now here we are approaching some pretty, like I would say, is key resistance. When do some of these carry trades really start to unwind?
But it's effective when it's risk off. Usually the emerging markets, because emerging markets need some kind of and then if you associate emerging markets with carry trades, they need a relatively positive or stable outlook and stable situation. Now, when the market is trading, call it risk off, call it what you like, get me out of here. It's normal that emerging markets are suffering as well. In the case of the Mexican peso, I think it's really the risk off scenario, risk for lower equities, uh, um, energy ramping higher, and I think Mexico must be like consuming quite a bit of energy as well. Those currencies always get sold off. Now, the carry trade, what are you carrying it against? Is it against euro? Is it against yen? Is it against I don't know what other currency? Swissy, for instance. But yeah, I think it's a bit too early to call the end of the carry trade, but it could come if the situation in the Middle East drags on and they don't find a solution, and there is more resistance to whatever Israel and the US wants to do than what they expected or could expect. We already seen a bit of uh, surprising spread out, which probably was not expected by markets straight away. So yeah, we're seeing an effect on the mix now. Um, yeah, for the carry trade to get yeah ramped out, that's a big question because we could argue that has it really come back in full swing? Yes, it has for a while, but then since the rate checks, if you talk about the yen, since the rate checks in yen, etc., I'm pretty sure that those carry trades, as we would qualify them, are already a lot less. And then if you look at the other thing, the one that has probably been thrown out of the window, if there was such a carry trade, was the one against the South African rand, because it's the South African rand. South Africa um, is really a country that suffers if energy goes up in the clouds, because they have their usual issues with Eskom, etc. And it's the South African rand has really been hit. Yeah, MEX has lost what, 2%. Okay, euro dollar as well, right?
Yeah, yeah. I mean, you've got some really potential. I mean, when was the last time? And we've seen this before, guys. When was the last time the rand was down 3% in a day? It's been a while. You know, we're down 1.9% right now. We could see squeezes like you can see here that will take place if, especially if the market breaks down. And so you bring up a good point, like what is the trigger point? My opinion is you want to see these emerging market currencies go into a tailspin. That's when the S&P actually breaks. Like when I say it actually breaks, it hasn't broken down, guys. Let me just, you know, do a little bit of work here for you. Here's the low where we're at right now. The all-time highs are just shy of 4% away. That's not very far, but that also means there's a lot further to go to the downside should, you know, the market accelerate. Like if we get well, let me do it this way. If we get a full let's just say an 8% correction from highs, you know, we're talking about 6,400, you know, 6,450. Yeah, a 10% move from highs. You know, we're talking about a move down to 6,300. So those like the market may be on the verge, but it hasn't really broken. And I think if it breaks, that's where a lot of the fluff is going to come out. We're going to see these emerging market currencies really come under pressure. I see Greg is here. I'm going to bring Greg in just a minute. But yeah, a lot of big developments. And I have to say the euro, and let me just go back over to the euro dollar. The euro is at pretty key support. These are levels that, even though I got stopped out of my euro last night, these are levels that I find attractive for the euro to be on the long side. Now, going back to the question about carry trades, the euro has been a funding currency for quite some time. You can actually see it really well in the euro Aussie. So Ryan, is this the time where you start to see some covering of euro crosses and you start to see a bounce here?
Good question. I'm not sure. I think you've got to be particular about your different currencies. Aussie dollar was holding up much better than everyone else, and then just the weight of the dollar buying got hit. But then if you looked at Aussie Kiwi, it was holding up well. Now that's come down a bit, probably due to the Kiwi dollar side of things. So it trying to pick out what cross is going to do what, you have to look at them in terms of what is being driven in the majors. So yeah, this was coming down, which was obviously euro weakness, Aussie strength, but then it flipped around in the Aussie dollar. So yeah, if you're going to be if you're trying to catch the knives in anything, whether it's this one or other ones and turns and crosses, you've got to try and pick the ones that aren't going to hurt you too much if they go wrong. And I made that point on the Flow show. We were watching the euro dollar. It was, looking all right at 116. Then it went all the way down to 115.80. Aussie dollar moved 3 pips. So you've got to look at those differences when you're trading different currencies, and pick your levels. If you've got a level, make sure it's a high conviction level.
Yeah, and I think in days like today, it's going to be very, very important to make sure that you guys just manage your risk, know where you're, adhere to your stops, and that's like the thing that I did, and it sucks. You get into trade, and you're like, okay, I'm gonna get long here. You put in your stop, you get stopped out. You have to be able to step away and go, okay, well, that trade didn't work. And now I have to figure out a different trade. But you are going to have trades that stop you out. But the last thing you want to be is in a trade where you don't have stops, or your stops are really too wide in a situation like this, and then you have to deal with like trying to work yourself out of a pretty negative position. Yeah. So
and take profits when it's there. If you're trying to fight the market, if you get into a profit, take some off the table and reduce your risk.
Yeah, exactly. All right. Well, let's continue on really quick. I just want to look at some of these currencies because I think the currency market's telling us quite a bit. Sterling remains heavy, but kind of I want to say it finally broke that 618 retracement, but it seems like focus is elsewhere. I mean, you got the Aussie dollar that just hit, or we're sitting on the 70-cent level. K-Man, are we going to break 70 cents in the Aussie? I mean, Aussie's got a lot going for it.
Yeah, I think we can have a look below. It all depends on what the US session will bring. Aussie has been, although it's come back down a little bit, but it's been on the S&P train. So it's two things for the Aussie. It's been doing better because, and Bullock confirmed that again yesterday, it's a net energy exporter. So it's been a bit, I mean, immune, it was a big word, but still doing better than most of them. But it's also been an S&P currency. And when S&P was looking fragile this morning, Aussie really got hammered, and it's actually losing a bit of steam again. I think we can have a look below. Yeah, why not? I'll be very interested to see if we get back to that old level or not, around what was it, 69.60s or so.
Yeah, this old trend line is probably what you're talking about somewhere,
60?
and it's this breakout point right there.
Is that 69.60?
Yeah.
Well,
roughly.
that's it. Yeah, 50.60. We could have a look down there and see what happens if risk continues to get sold. But yeah, the the thing is, if you look at stuff like Euros, for instance, it's been sold. But then what happens if energy comes back down? If you find a solution, Aussie should not be the better one then, because Euro may be the better one, just by the mechanism of what we have seen over the past 24, 36 hours. So yeah, I think there is a bit of a risk. We are going for a look below 70. Will it hold down there? If that situation in the Middle East drags on without clear results, yeah, it could have a look below and stay below a little bit longer. But I'm not really an Aussie bear yet.
So just over here, Mark was talking about in our chat room, the Armaco explores plans to export oil via Red Sea to avoid the Strait of Hormuz. So what do you think that could have an impact on how things trade?
Yeah, it had when it came out. It had stocks went a little bit higher. Aussie bounced, but now it's fizzling away because I mean, you can go via the Red Sea, but then you still have to go past Yemen, which is not your most friendly country either. But maybe they will have an easier task in controlling one country than most of them around the Strait of Hormuz.
Yeah, that's a great point. Hey, we do have Grega here. Grega, how are you? You are muted in case you're trying to speak. Maybe he's not trying to speak. All right.
I'm here.
Oh, there he is.
Can you
Hey,
hear me?
Grega, how's it going?
Yeah. Hey, I'm fine.
Hey.
Thanks. Watching these spins in the markets.
Okay, yeah. Hey, you just posted this in the chat room, US dollar, Norwegian krona. What's your take here?
Yeah. Well, as you said yourself earlier, I mean, the first thing is that despite everything what's going on, the S&P 500 in general is not really breaking down yet aggressively. While we have the dollar index, as you pointed out at the beginning of the webinar, that we on dollar index are at the potential short-term resistance. My view is still that the dollar eventually, after some pullback, will continue higher. But if in the near future we'll see some stabilization on stocks while the dollar will make just a temporary pullback, I think that NOK could do pretty well. It has been the same thing in the past whenever we have some crude oil market moving significantly to the upside. So I think that NOK could do well. And I agree also with Cayman, who said that Aussie is still not bearish. I mean, it's just retesting lower resistance levels. So if maybe, let's say a few weeks back, you would aim for any kind of a pullback, well, this pullback is just happening right now on the Aussie. And I think it's quite attractive zone here in this your yellow box. So I think that there is a chance that commodity currencies will still do well if, of course, stocks will not see any kind of aggressive move to the downside. I just think that the S&P 500, if we will open the chart of the S&P 500.
Yeah, let me get there right now. And so I can, let me get my drawing tool out of the way. You guys can't see that, but I can. Here's S&P, and here you go.
Yeah, I was aiming for a break below that levels here into 6,722 level. And we are basically right now at this potential support. So I think it's a very important level, very important decision day for this week, I should say. And usually also what we should consider that previously, historically speaking, whenever we had any kind of a war, invasion, escalations, usually after initial drop, stocks were able to stabilize in a few days, right? So we're still in the first phase, but I think in the second half of this week, we could see some similar play because markets will be desperate on any kind of a positive news, and this could then lead to a rebound. But it really depends how the stuff will unfold in the next few sessions. But certainly it's not a bear market, but the big picture, if you will switch to the daily chart, that's the second alternate count. go to the right. Exactly. So the big
Oh,
picture
sorry.
still,
This
that's
one.
okay. I mean,
Yeah.
what, anyway, we are in a fifth wave, right? So we are still not seeing the real breakdown here. But of course, if the current levels this week, if this week stocks will be able to stabilize, then I think that we will be able to see some more sideways price action, potentially even see some nice rallies going forward. But as we look maybe in front of a few months, I just still think, or maybe just focus on this year, I still think that we are in a very late stages of the higher degree bull run. But as you know, calling any kind of a precise stop or bottom, it's always not an easy task here. So
right, you know, and I know you've agreed with me as far as these counts go, and I'll just go back over to the S&P really quick, and then I did have a question on the pound Swiss, or no, Canadian Swiss. I'll get to that in 1 second. So thank you for writing in, Jeffrey. Just stand by, and then Stephen, I got an answer for your question as well. Just going over to the S&P. I mean, we've been sitting on this on these counts. I mean, this is all the way from COVID, and then this is from the low in 2022. I mean, you know, wave 5. I mean, we've been sitting here literally for the last 6 months. So, as you pointed out, Grega, timing the top. I mean, you could say, oh, this is the top, and we could look back 2 years from now and go, wow, that was the best call in the world. But was it? Because it sat here for 6 months. So you wasted 6 months of your life. I mean, from a, you know, percentage wise of your life sitting here waiting for a turn, you've missed a lot of big moves, right? So just because this might ultimately be the longer term top doesn't mean that it has to turn right at this moment, and it still could sit around for another 2 months before it actually turns.
Yeah, exactly. But
Right.
I think that the main story will come from the US dollar itself. I mean, when I'm looking at the dollar index, some higher degree time frame charts, I just still think that even this one is coming in, already reached some major levels down there in January, and I think that this will be some kind of a decision point around 99.50 to 100, which obviously we should completely broke through it for stocks continue south. But if we also, on the other hand, consider that now with these geopolitical issues, we even have metals that are struggling, then this to me tells that there is some interest more than ever before to move into cash at this stage, at least in the first 2 days of this week.
Right. Now this is your gold. This is your gold.
We are already lower.
Yeah. We've obviously sold off from there, and you're looking at the exact same level we're all looking at, is at 5,100. So if we get below 5,100, that's not going to be a good sign. I know we probed it already this morning. I think we went as low as 50, 70. But when you're talking big levels like this, being on either side of it by 20 or 30 points doesn't really matter.
Yeah, I mean, whenever I'm looking at any kind of levels, and highlighted this on the charts that we share with members, I always try to highlight these levels that are important, or either they hold as a support, or maybe they will broken through, but only if we get a daily closes, because daily close is, to me, the most important price of the day. So if we finish the day after retest higher, then it doesn't mean we've broken through. So obviously.
Great. Yeah. And great way to describe it. I'm going to come back to Ryan and K-Man. I know we don't have data today, but I do want to address a couple of questions. I got a question from Jeffrey about the Canadian Swiss, and the Swiss pairs are really interesting. And matter of fact, the Euro Swiss is a little bit weaker, you know, and the Swiss franc you got to be very careful with, because even though the Swiss National Bank has, and this is obviously a weekly chart, and I can go to a daily chart, and it actually looks pretty nice on the day. You can see this nice couple of bars, you know, back to back. I don't know if I'd actually chase Swiss franc lower right now in this environment, because, you know, I've got Euro Swiss long, for example, and I'm literally break even at this moment from yesterday. I mean, I was just up 20 pips or whatever. The risk is that they could, the Swiss National Bank could actually intervene, and some people would argue that they did intervene yesterday. But I think what's going to be a better situation is if you let if we can settle down the current environment. I think the Canadian Swiss, or any of these Swiss pairs, are probably better longs on rallies. And you want to look for topside breakouts, and these are ones where you can actually get momentum chasing to the upside. That would be my opinion. Another question came in from Steven, says, what are the vibes like in the US over this war? I think it's mixed. And I'm not the best person to talk to regarding this, or because I tend to be in a very red state, and one that leans very far right. So it depends on who you talk to, but I think it's a lot of people are like, it depends. You're in certain parts of the country, and people are going to say this is senseless. Then you're in other parts of the country, kind of like where I'm at. People would say, but you've seen what Iran's done for all these years. So I think it's mixed. I wouldn't say it's you have everywhere from a senseless war to it's about time that somebody's done something right, or did something about the Iranian situation. So I'm not the right person to ask, because I'm in such a left leaning, or excuse me, a red leaning state. So anyway, just my opinion. That's why I try not to have none, and just understand what the market's doing in front of us. Ryan, let me come back to you really quick, and then I'm going to make my way around. But Ryan, what should we be doing today, in your view?
Apart from being careful, you just need to follow the flow, what's going on. We've had some moves today. Are they going to continue? You've got lows or highs in pairs. Lots of people like trading euro dollar. So we've got a low, 115.81, 82. We've bounced from there. So if you want to be getting into something, watch those sort of lows. If we're breaking them, we're carrying on. You've got to be careful catching a knife. But if we hold those levels, then maybe you get a bit of a short-term bottom and a bit of a recovery. So look at what's been set in Europe and Asia as far as highs and lows concerned, and use them as your marker intraday.
Okay, got it. Oh, Stephen said, I was thinking more complacency regarding time frame or severity of the politics of it. Oh, I see. Yeah. So yeah, I don't know. I'm going to go ahead and move along. All right. So Ryan, you're just saying manage your positions, manage your levels, don't let your trades get away from you, that type of thing, right?
Yeah. For example, I picked up some Aussie Kiwi on the break yesterday. I managed to take some profit. I've just added back what I cut a moment ago, because we had this break point at 118.80, 190. Sorry, 118.90, 119. So I'm testing to see if it holds the break. But if it doesn't, I'm not going to be wrong for 1,000 pips before I decide to get out.
Right. Okay. One of the things is, as RJ said, we haven't even talked about crude oil, which I should probably. And matter of fact, Greg, before you go anywhere, I'm going to look at your wave counts with crude. But we have crude oil, obviously testing some levels that are previous highs from back here in June. This is the continuous contract, so if you go to the front month, you might have some slight differences there. But the one thing that I think should be on everybody's radar is this is a 618 retracement. You can see it here, right around all of these key levels. That means we get much above 80. I mean, it's going to be hard to stop. I think there's a lot of people who are bullish crude, but man, this thing's moving up pretty aggressively right at the moment. By the way, dollar MEX is breaking topside resistance. I picked up some dollar MEX a little bit earlier. I know a lot of people did as well. This is one of those. If we take out, this is a previous low from back here in when was that exactly? Let me move this out of the way. That was back in summer of 2024. We break much above the 1761, 1762, and this thing's going to go for a little ride. K-Man, what are you thinking right now as far as what to be doing today?
Oh, that's a good question. I think the market is still in quite a risk-off mood. So no positive changes for the situation. We'll probably keep the market in there. And then I'm thinking about
Could I ask you really quick about that?
Yeah.
What would you say would be a positive turn in the markets? What would you be looking
one of
forward
the
to say?
things.
Yeah,
Yeah,
okay.
one of the things is in the immediate, and I'm not talking about regime changes or whatever, because before that happens, I think there's going to be much more blood flowing. But I'd say if they can, and that is confirmed, if they can take out the missile launches in Iran, and perhaps a bit more of the Hezbollah targets, because they have joined the whole picture, as we know. And so yeah, that would be in the immediate some positive signs for the market. I'm not talking about war or whatever, but just for the market, I think that would be a pretty positive thing. So because taking those down and eliminating the threat, or the threat of many, we never know how many they have, but taking that threat away also takes a lot of the threat away from other countries in the Gulf. And then from there, where we could see some tankers again going to load and restore the some of the oil supply. So that would be a pretty positive news.
All right. Very good. Angela, great job on Friday picking up crude oil. That's awesome. And some dollar mex. Good for you. Grega, last but not least, what are you thinking for today?
What I'm thinking for today, that euro dollar could rally a bit, but I would be looking maybe to short rallies around 116.70 if we get a solid bounce there. But then, as I said earlier, for during the US hours, if stocks would be able to stabilize, watch for Aussie and NOK to see some rebound there.
Okay. And by the way, guys, the Aussie is probing the support, like horizontal support. This has been, really a range that we've had since all of last month, and we're breaking through that level. The 618 is at 69.95. It's a level that obviously we've been paying very, very close attention to. I think every day we pretty much write down that number. That's a 618 retracement, and when you find the 618 just below like a big figure like that, that's one of those things that in case we continue to break down, you do have to be careful, because there might be some support just below that. So maybe Greg might be looking for a bounce from there. And I'm going to reiterate what Ryan said. You guys have to be really careful with your levels today. I would be watching the S&P, because if the S&P does give up 6,700, and I know that's 60 S&P points away, but 6,700 is the 618 retracement of this entire move. You guys can see it from low to high. That's 6710. If we give up 6,700, that means we're giving up a lot. We're giving up horizontal support levels that we haven't seen since, well, I guess you go all the way back till Thanksgiving of last year, November of last year. We start breaking through those levels. That means that those emerging market currencies are really going to take off. I'll probably just be adding some of my dollar mex here, because when you pick up a position that's in momentum, adding to it, as you look for extensions, you've seen these emerging market currencies, when they go into squeeze mode. You guys might forget, and it might have been a while since we've seen any type of risk off, but you guys can see these moves are big and they're massive, and this is what you get during risk aversion. So, if you think about that, going back to here, we see moves that look like this. The dollar mex could be very easily trading back at 18, or the 200 DMA, in fairly short order. So if stocks really break down, these emerging market currencies should really, really take off. So that's going to be some of the thoughts that I want to give you. And remember, the best place to be, guys, is in the Forex Analytics chat room. We're talking about all this stuff all day long with traders from all over the world. So be abreast in the Forex Analytix chat room. That's the best place to be, in my opinion, where you're going to have coverage 24 hours a day from, not just myself or Ryan or K-Man, but or Grega, but everybody from all over the globe. So with that being said, you guys be safe today. It's a pretty dangerous market right now, obviously. So mind your levels, like Ryan said. K-Man, be out, or like what K-Man said, be out on the lookout for some of those major headlines coming through. And Grega's got a lot of big pivots for us to be, focused on as we navigate through this very, very treacherous market. So, gentlemen, thank you so much for being here today. Grega, Ryan, K-Man, thank you guys.
Cheers, Bake.
All right, and everybody listening in, thank you so much. Remember, we're going to be here all week. I'll see you tomorrow morning at the same time. You guys have a good day today. Be safe, and we'll see you then.